We have a very special guest in studio today. He is a good friend of mine. He is an SBA lender with Venturis Group, a division of Heritage Bank here in St. Louis, the great and powerful Sully Erger. Welcome to the show.
Sir. Thank you, guys. Thank you. I appreciate it. Way overdue, but happy to be here. Excited to dig into some real estate stuff with you guys, and share a little bit more about what I do, especially because what I do is super niche. Not a lot of people know about it. And I think it can be a great tool for not only my clients, but maybe some of your clients as well. And any other listeners that might be out there. So,
well, go ahead. Tell us about it.
Yeah. So I'm an SBA lender, like Zach mentioned, with Venturis, which is a division of Heritage Bank. SBA loans specifically, were designed to help small businesses that can't get what you would consider like conventional or traditional bank financing. I still work for a traditional bank, but a lot of the times small businesses can't get this conventional or traditional financing, usually actually 99% of the time due to a lack of collateral. Think for example, like a loan I would do is a business acquisition. A good 70, 80, sometimes 90% of that purchase price is goodwill, no tangible assets to collateralize that loan. So what the SBA did was come in and they provide a 75% guarantee on these loans to reduce our collateral exposure on them and expect the bank to get a little bit riskier with their underwriting guidelines. So do loans with little to no collateral and finance these business acquisitions. Otherwise, there's not a lot of tools out there to finance acquisitions or a variety of different projects for these small businesses. You're looking at private lending, which you're getting 15% interest rates on, or you're looking at maybe the private equity route, and then they're trying to gouge into your ownership, and people aren't favorable of giving that up as well. So yeah, it's a great program for any small business operator that can't get just your traditional bank financing. Open up a can of worms here with this question, but yeah, I'll give you guys some more background. So I went to Ole Miss, graduated in 2016 with a banking and finance degree. Thought I wanted to be an investment advisor, got into it, did 3 months at Mass Mutual, quickly realized that that's not what I wanted to do long term. And then worked in the investment advising world for about another year and a half, slinging 401ks to small business owners. Really hard to do at 22, 23 years old. But it was a good run, built some thick skin in these sales roles, a lot of cold calling and networking and whatnot. And then I got a call in 2018 to be an underwriter for an SBA shop here in St. Louis. It was a small local bank that was starting up an SBA division. Went over there. I jokingly say I didn't even know how to spell SBA at the time, but went in with an open mind and just took a natural liking to it. I've always had a knack for numbers throughout my childhood, high school, and well into college, hence the finance degree. And so I underwrote for about 3 or 4 years, and then had the opportunity to transfer over to the lending side, which is more of the sales side for the people that don't know. And I've been on the lending side for about 3 or 4 years now. And it's been an awesome experience. I can truly say I can see myself doing this for the rest of my career, whether that's 10, 20, 30 years. And I'm very fortunate to say that because I feel like there's a lot of people out there that can't say that, especially people our age. They're just working for a paycheck, and I'm not going to sit here and lie that I'm not working for the paycheck, but I truly do get a warm, fuzzy feeling doing what I do day in and day out, providing blue collar folks with some advice or tips and tricks on, hey, how do I get an SBA loan? Where do I start? How do I get approved? How do I do projections? It might seem like simple stuff to you and I, but you'd be surprised the lack of financial acumen with a lot of business owners. They're really, really good on the operations side and can manage people, but sometimes they don't even know what a profit and loss statement is. And you're like, wait,
taught it.
Well,
yeah, you're not.
And it's not even just the business side. I mean, I see it on the residential, helping people buy homes. I mean, just the lack of knowledge around that. Some of the finance stuff that I see coming through in terms of are you putting any money away in a 401k? I think so. I see your paycheck. There's no money going into a 401k. You should probably look into something like that. Or I mean, it's insane just how little people know about it. And it's terrible.
Yeah. And it all started for me, actually. It's funny you bring this up. The knowledge and education part of it started for me with a personal finance class at CBC in high school. I had one senior year, and it was literally mortgage loans that we were studying and like interest on them, how everything was calculated, very basic stuff. But just going through those exercises and seeing how much you're paying in interest on even a 15, 20, 30-year loan, you're like, holy cow.
Right.
And you know, I took that class as an elective. It wasn't required. And I think, I don't know, but I hope since then that state laws have changed. Like, hey, you're not but they need to change those ASAP. You know, I think we need to implement more life skills and education, maybe even start in grade school, not, you know, much less high school. Right. So that's where it all started for me. And then it's blossomed into this awesome thing here as a small business lender.
Yeah, it's like, I'm really glad I learned the area of a parallelogram.
Yeah.
Instead of how to
cosine, tangents.
Right, like all this shit that you learn.
That's so
like
important.
How to break down like a sentence. Or what do they call that? Like you guys have to do that with the line, the slashes, and you put the verb and the, you know, like it was like, I mean, I get why I'm having to learn this, but like, I already know how to talk. Well, you know, I could speak. Like, I get it.
I remember taking a class in college, a business class, where they taught you how to simplify your emails, like how your communication with people. Where in like you're taught growing up, like, oh, you need a 10,000 word essay. I'm gonna take a 10,000 word essay and condense it into fucking 2 sentences in an email to send out to be concise. And it's just like,
Jesus.
You bringing that up reminds me, like, when you had to hit a certain page amount or whatever, I was making like the periods extra font size to push it one extra page.
Oh yeah.
And now I'm keeping my emails as short and condensed as possible.
Yeah. Nobody wants to read a novel. No. You know, like I see a big long email come through. I'm like, God, I don't have the time to read this right now. You know,
just give me a call. Right. Honestly,
emails suck. By the way, I get 300-400 a day. I get through. You can't
get through.
No.
There's no way.
I call 80 to 90% of the time and respond instead of just sending an email.
Yeah.
So I'm right there with you guys. But yeah, no, that was part of the excitement to get on. There's definitely a lot of overlap in the mortgage industry and in those loans, along with SBA loans. And so excited to have your listeners learn a little bit more about this. SBA lending too is very referral based, unlike traditional forms of bank financing. So, for example, traditional financing, a lot of it's repeat, like a line of credit. You know, you need to essentially re-underwrite it every year or 2 years, and so you kind of maintain this ongoing relationship with the small business owner as a conventional lender. Whereas I'm not really doing lines of credit. I'm doing business acquisitions, commercial real estate purchases, franchise startups, and there's some other stuff sprinkled in there too, debt refis, equipment purchases. And sometimes there's 2 or 3 different uses of proceeds on these loans. For example, I had one close not too long ago. Primary use of proceeds was a commercial real estate purchase, but the guy had like $500,000 equipment that he wanted to refi, and then we did some working capital for him as well. And so it's more, you know, I treat it like a long-term relationship because they may come back 5-10 years or later, but really after I do that one loan for them, it's kind of one and done. So my relationship is more so with guys like you, business brokers, CPAs, mortgage brokers, the list goes on and on. And so that's why I was really, really happy to connect is residential real estate agents are great. You know, you guys are working with a lot of small business owners. Hey, you did my house.
Right.
Do you know anybody that could help me with an office or a warehouse for my small business? So yeah, very, very referral based. And so that's why I spend a lot of my time networking, you know, outside of just the small business ownership place. Cause most small businesses don't need an SBA loan. They're actually trying to chase a conventional loan if they can get it. So, you know, why hesitate chasing those guys if I can just go straight to the referral sources?
Right.
But yeah, it's an awesome program. The SBA has been around since the 1950s. It was actually designed during the Eisenhower administration. For those that don't know, I think most people do, but it stands for the Small Business Association. It's a government entity. Their sole purpose, very generalized statement, is to help small businesses gain access to capital, in whatever way, shape, or form that might be. So I specifically do a lot of SBA 7A loans. You also hear about SBA 504 loans, which are primarily used for real estate and heavy equipment. During COVID, you had what was called PPP loans, which was the Paycheck Protection Program. That was really just the government giving out cash to small business owners to help them survive those first 6 to 12 months of when COVID was coming on, and we didn't know how it was all going to play out. You got SBA EIDL loans, which are emergency disaster relief loans. Those actually come directly from the SBA. Glad I'm bringing up those now because I'm seeing requests from people from the May tornadoes here in St. Louis that are requesting like a 7A loan for me. But I'm like, hey, you can get a much friendlier loan and maybe even some grants from the government or your insurance companies to help you guys recover from these types of things. So there's a variety of different programs out there. And not only like the lending programs, I encourage small business owners to get on the SBA's website. There's free business coaching programs out there. Every SBA office, so there's like regional offices spread out throughout the United States. They break them down into districts. So like Eastern Missouri has one. We have downtown an SBA office. There's one, I think, in Kansas City as well that makes up the western side. So depending on the size of the state and population and the cities within that state, there'll be an SBA office nearby, and they'll have what's called SCORE. So capital SCORE. I can't remember exactly what it stands for, but you can go there and they'll help you build projections and help you build business plans for free. Really? It's government funded. And it's not like they sit down and say, hey, put $1 million in revenue, put XYZ for your operating expenses. They get down to the nitty gritty. Like, how many units do you need to sell to get to $1 million in revenue? How are you calculating your operating expense? Utilities is easy. You can reference a utility expense or something like that. But some of the more variable expenses, they'll get down to the nitty gritty, and really get you, turning and thinking about, hey, how do I come up with these projections? Actually, some of the best projections I've seen have been through mentors from the SCORE program. It's a great program. It's starting to become more popular because of PPP and COVID. But opportunities like this, podcasts, LinkedIn, Twitter's blowing up with it, is really helping spread the knowledge. And, we're working with your everyday mom and pop shops. We're not talking about, $500 million tech companies. Actually, those types of companies aren't even eligible with our program.
Right. That was going to be one of my questions. What classifies someone as a small business? Like, is it a amount of revenue that they bring in? Is it a number of employees? Is it what exactly will qualify you for an SBA loan?
Yeah.
I would imagine at some point you're too big to get one.
Right? Yeah, no, definitely. It's a great question, and it'd actually be easier to answer, at least specifically for the SBA 7A program, which I'll keep referring to because it's the most popular program. It's the one that I'm primarily working. But it'd be easier to ask what businesses aren't eligible for it, because that's a much shorter list than businesses that are eligible for it. Essentially, I say that in quotations, almost every small business that's for profit is really going to be eligible. Every small business that you're going to think of. Some examples of businesses that aren't eligible are going to be like other banks, businesses that are in the actual lending field. We can't lend to them. Passive companies. So yeah, unfortunately, you guys probably have fortunately for you all, but unfortunately for the SBA program, you guys have probably a lot of residential real estate investors, or maybe even commercial real estate investors that listen. They wouldn't be eligible for the program. So passive investments aren't eligible. The program really isn't designed to help landlords or investors, get wealthier, or get richer. It's to help active small businesses, continue growing their business. Life insurance companies aren't eligible. And there's a few other miscellaneous ones. Businesses that have more than 50% of their revenue coming from gambling aren't eligible, but a gas station that sells lottery tickets, as long as their revenue, less than 33% of it comes from, lottery ticket sales, they're eligible. Some examples of businesses that I do work with, though, are going to be, home contracting businesses, HVAC, plumbing, electricians, assisted living facilities, mostly on a smaller scale. We can't work with like the larger private equity owned assisted living facilities. They're going to be just too wealthy for us to work with. But your one-off, 10, 20, maybe even 30 or 40 unit assisted living facility would work. Daycares are great. Essential businesses are great. I've really kind of dove into the gym and fitness world just because I like it. I'm a gym rat myself, so looked at some F45s, some Orange Theories on the franchise side. I'm looking at some non-franchise gyms as well. Pharmacies, jump in.
Is there a sector that you've seen just blown up in the last few years?
No, I mean, just the industry as a whole. Everybody needs the financing in some way, shape, or form. I'm sure that you could pull some data, SBA data, and see like, hey, maybe car washes have blown up over the past couple of years. I mean, I know without looking at SBA data, just St. Louis wise, they're on every corner. I think, if I'm not mistaken, St. Louis County has even started to enforce some laws where like they're limiting car washes within a certain radius. Yeah, because I mean,
makes sense.
You got them popping up everywhere. And they're large, businesses. They take up a lot of real estate, and so I think they're starting to. Yeah, they're loud, and I think they're starting to put some rules and regulations on how many can go in a certain vicinity. But that'd be interesting. I'm actually trying to schedule a call with he calls himself like an SBA nerd on LinkedIn, but what he does is he pulls data on SBA loans on a nationwide scale, and he'll take a look at trends that are happening in the industry. So we'd definitely love to circle back with you after I have a call, and I'll pick his brain on that. But no, just the industry as a whole has really blown up ever since PPP.
People say, I don't think I ever even heard about SBA until PPP.
Yeah, most haven't. Most even small business owners who you'd think their algorithm might be putting SBA loans out there. Maybe their CPA might have mentioned it, maybe not. PPP is really what kind of pushed into the forefront more recently. They're like, oh, hey, I can get a PPP loan. What else can I get out of this program? So it's a great tool. Going back to some of the businesses, would love to share too more about the size range too. Like we're lending anywhere from a couple $100,000. I've financed some smaller coffee shops here in St. Louis, but we're also getting we're capped at $5 million with the SBA program for our loan amount. So we're looking at some decently sized like manufacturing companies, something that would be based like down the street in an industrial area in Fenton or maybe Hanley Industrial. We've done a few like outside of St. Louis and more of the rural counties as well. But it's a great mix, and honestly, that's easily one of the best parts about my job or my career path is getting to take a look at these different small businesses and trying to understand how they operate. Because as the lender, people come to us thinking we know everything, and sometimes we do. As you get experience, you learn more and more. But in the beginning, kind of faking it till you make it type of thing, and acting like the trends with the business, but. That's the coolest part, collecting tax returns on these businesses and just seeing how the trends look differently. I brought up car washes. I love car washes. I might even invest in one someday. I worked at Waterway for 4 years in high school, so I think that's where it started. But the margins on them are insane. For example, I think a car wash spends anywhere from 50 cents to $1 on the soaps and chemicals for one wash for you going through that tunnel. Yeah, they're charging you anywhere from $10 to $40 for that wash. So just think about the margins there, and there's more to it. They got overhead, utilities, water bills, etc.
And then if you get one like Waterway where you've got a lot of employees, labor is going to be high. And then there are a lot of car washes out there where they've got 2 guys in the whole thing. Like
or you have the tunnels.
The tunnel, he's leading you in, and then you might have someone else
just reminding you put your car in neutral.
Right, yeah. That's pretty much it.
You're like, get the hell out of my way. I know what I'm doing.
I've been here before. Yeah.
But no, and those, key tip. Those are the real money makers there. The drive-through ones that you can find, especially if you're looking for something a little more passive. You can maybe only have one or two people there running it. Think of like the Bright Works of the world, or even the country clubs.
Zips or whatever.
Zips,
the one that I'm at that's over there off of Baxter and Clayton, over across from Homestead. There's one right there.
Yeah,
but it's like $30 a month and unlimited washes for $30 a month.
Yeah, but you got to think, if it's $1 to go through, if it costs them $1 for, it's like are you going to go there every single day? Like they're making their money.
No, yeah, absolutely.
Well, and you bring up a good thing too, subscriptions. I make sure damn well I get the most out of that subscription every month. I'm forcing myself to go at least 3 or 4 times, but I would love to see the statistics on how many people aren't making it in and make at least getting their money's worth with that subscription. It kind of like is similar to a Planet Fitness model. Make it low enough to where you're not going to cancel it, but also make it high enough to where like they're going to be profitable. And when you have a subscription based model in your business, whether it's a car wash or an HVAC company or anything else, it adds value to that business. Like literally the valuation, you will get a higher multiple on that business because of the subscription component. Banks and buyers look at that as as a risk mitigant. Hey, that's going to be essentially reoccurring for years to come. So those are great business models to chase after.
One that I've always been interested in too. I don't know if you've done any of these or if you can, but like storage units or like the land storage for the big like tractors and boats and things like that.
Yeah.
I got a family friend that has I was just talking about it a couple of weeks ago. He's over in Illinois and he started back in the 80s and he bought this building for $68,000. Now when they went to look at it, it's now like $500,000. It would be like $500,000 to replace it.
Yeah.
And he's on this thing free and clear for years and he's just collecting money every month from people just storing stuff there.
Yeah.
I know. I got a buddy. I think he owns 5 or 6, and I think he's moving back to St. Louis from Kansas City. So Steve, whenever you come back, we're getting you on the podcast, buddy. But yeah, he has I think he's got 5 now, like 5 storage units, and I think their first one, if I'm not mistaken, was like down, and I think a lot of them were down at the Ozarks, and I think it was a parking lot with like a gravel parking lot with a barbed wire fence around it, and people park their boats.
Yeah.
Like,
they're cash machines, man.
Right.
No, I'm glad you brought it up. That's another great sector we love to be in. Very safe from a risk standpoint. I've looked at a couple of them. I've looked at one in Columbia, Missouri that was doing really well, but storage units are definitely eligible with the program. That's one of those ones that kind of teeters on like the passive income, but there is some daily management of the business. And so there's a few that you would think would be passive and not eligible with the program. For example, hotels, how they kind of look at like hotels or Airbnb types of businesses is if your revenue, more than 50% of it comes from stays that are less than 30 days, so short-term stays, it's essentially going to be eligible. I've actually financed a larger, it was kind of like a warehouse where the guy did like 10 different Airbnb rooms in it, but we were able to get comfortable with that because his projections show that most of it was going to be short-term stays. Whereas with Airbnb, you can open yourself up to medium to long-term rentals.
That's
and so, we gotta keep an eye on that. But storage units technically are considered eligible with the SBA. So yeah, that's another industry that I would like to get into. I stay stock in Biz by Sell, which is kind of the most popular marketplace for buying and selling small businesses or just finding businesses for sale.
What's that called?
Biz by Sell. So think of it almost like the Craigslist of businesses. Yeah.
Cool.
You can go on there and find maybe a local vending machine route or an ATM route for $50,000. You can go on there and find
those things are profitable too.
They are.
Yeah,
they are.
That does that.
Yeah. Or you can go on there and find a $10 million company for sale. I mean, you can find a little bit of everything.
Biz by Sell, right?
Biz by Sell, BIZBUYSELL.com. You can go online. It's super easy to use. You can put in different filters. Like I will filter, St. Louis, Missouri type of businesses, and I'll just go online for fun.
Just to see what's
Maybe
out
it makes me sound like a total small business nerd, but like I just want to see what's available, what's out there. But I'll do that. And like storage facilities are hard. I think a lot of the big boys have come in and swooped them up. I mean, Extra Space, like the other day I was pulling out of Brightworks on Manchester and Rock Hill. Extra Space right there. You get a mile down the road, just past Manchester and Brentwood, another Extra Space. And so they some big players, a lot of monopolies in the industry. But if you can find a good one, man, I would definitely consider jumping on it. Another great thing about SBA specifically with business acquisitions, we can get into like some of the terms and like how these things are structured, but like you only need 10% down to buy a business. That's another thing. Yeah. Like, like you could buy $1 million business with $100,000 or $100,000 business with $10,000 down. So it's almost similar to residential and probably even commercial real estate in regards to what you're putting in. Do I personally get every deal done with 10% down? No, but I would say 80% of them, 90% of them I do.
Wow.
The times I don't, it's not anything more than maybe 15 or 20%. And the reason we're doing that goes back to debt service coverage ratios. Mm-hmm. Yeah, collateral, debt service coverage, or maybe there's something else on there where, we just want a little bit more money down on the project. That's just another thing about this program that not a lot of people know.
What kind of ratios are you guys looking for on this?
Yeah, great question. I like to break it down into like 3 to 4 tiers. So on the low side, so per the SBA, the SBA has what's called standard operating procedures that all banks that are involved or participate in SBA lending, which side note, only about 15% of banks nationwide are involved in SBA lending. It's super niche. It's hard to find good talent in the industry. There's very few training programs for SBA folks. So you just kind of learn by getting dragged into it like I did. I got called, I had a finance degree, but I didn't have any underwriting experience. And, I got taught they threw it right up on my desk and kind of said, hey, figure it out. And, I could ask questions here and there, but that's really how you learn. But yeah, only 15% of banks lend in the SBA space. And then remind me, what was your question again?
The ratio.
The ratios, yeah. So the SBA puts out their standard operating procedures. They state at a minimum we need to be at a 1.15 debt service coverage ratio. But that's I say that if any bank was to underwrite to the SBA's SOP, they would essentially default or go bankrupt because the standards are relatively low. The bank is expected to build their own underwriting requirements on top of those standard operating procedures. So do we get deals done at a 1.15? Yeah, absolutely. But I would say like a 1.15 to a 1.3 is considered weak. I would say a 1.3 to a 1.5 is considered adequate. I would say a 1.5 to a 1.7 is considered strong. And I would say a 1.7 on up is considered exceptionally strong. And so for anybody that doesn't know what a debt service coverage ratio is out there that's listening, I like to dumb it down in this way. So let's use a 1.2, for example, because a lot of people aren't familiar with what a debt service coverage ratio. Actually, most of the small business owners I talk to are like, I don't know what you're talking about.
We're starting to see it now with on the mortgage side. That's become a popular loan program. Recently.
Yeah. But to break it down or just simplify it, a 1.2 debt service coverage ratio essentially means that you have $1.20 of free cash flow coming from the business to cover every $1 of debt that you have to repay. A 1.5 means you have $1.50 of free cash flow for every $1 of debt you have to repay. So the higher the ratio goes, essentially the more cash flow you have relative to the amount of debt that you have to pay back. And so yeah, debt service coverage, we call ourselves cash flow lenders in the SBA industry, especially because like we're doing loans where we're under collateralized. But debt service coverages are the primary factor we take a look at. But then there's 4 other credit factors that we really hone in on any given deal. Collateral is going to be your next one. So we look to collateralize the loan with business assets first. If we're not fully collateralized with business assets, we do look to come after personal assets, which is key to bring up. Mainly just any real estate that you own, whether it's residential or commercial. We will put a first or second lien on that property. There can be a lot of heartburn from potential borrowers about that. But what they need to understand and realize is we're looking at doing $1 million, $2 million loan for them that's pretty much has little to no collateral. Like we're the ones really taking on the majority of the risk. Yes, there's a little bit of risk with us putting a second lien on your home. But what I kind of throw at people sometimes is if you're not willing to bet on yourself, why do you expect the bank to bet on you?
Right.
And that's just getting real and getting raw with them, and really getting them to think about, hey, yeah, like I should be willing to risk this, or if you're not confident in that business that you're buying and you're not willing to put a lien on your house, why are you buying this business? You should be that confident going into an acquisition. Another thing too, if we're in a second or worse lien position, and my bank would hate for me to be saying this, but we can't do anything if the loan goes bad. If that mortgage lender is in first lien position, as long as that lien's in place, we can't jump their lien position. So that's something I use to mitigate some of the risk that people have about putting a lien on it. Real quick, third credit factor we take a look at is personal credit. So folks, make sure your personal credit is in good standing. Not asking for anything crazy. We look for like a 680 or higher, give or take. We're really looking at the history more so than the score. I mean, do you show a history of making late payments or not? Do you have collections? Do you have bankruptcies? Things like that. We'll work with people that have some what we call hairy items on their credit report. It doesn't have to be squeaky clean, but the squeakier and cleaner it is, the better terms you're going to get from the bank. Fourth item we take a look at, and this one's often overlooked, is post-closing liquidity. And this might be something you guys look at on the mortgage side as well. Like, what does your cash position look like after you're 10% into the project? Like, I get people that come to me all the time, and let's just use $1 million purchase price as an example. They got $100,000 in savings, and they want to put all $100,000 down on their 10% equity injection. That's great. I love the ambitious approach, and but that leaves you with nothing afterwards. What happens if a personal emergency pops up? They're going to happen. What happens if, the business hits a rut in the first month or two and you need some working capital, which is just a fancy term in banking for cash to help cover operating expenses?
Yeah,
we want to be able to
breaks, right. Like
something's going to happen.
Yeah, something happens. Like people, I see that on the, definitely relates to us with the residential real estate. Like, people want to put all the money that they have down into the house. I'm like, hey, what if you get in there and you're living there for a month and your air conditioner goes out?
Yeah.
Like, what do you do? Or, your sewer backs up, or like something, that costs big money, and you're just going to be sitting there with no money in the bank. Like, I can pay the mortgage. It's okay. Well, it's not about just paying the mortgage. It's about, you need to have some money set aside, like ready to go if, in case shit hits the fan, because ultimately it's going to. Like, I just got something going on at one of my rental properties that we just found out this morning. We had our landscaper went by, the guy that cuts the grass, and he's like, "Hey man, I think you might have something going on with the plumbing in your house, because like the grass is all wet and there's water like trailing out of the grass in the front yard onto the sidewalk." And I'm like,
boy,
fuck. And so we have a plumber go out, and he's like, "Yeah, the water line going into the house is like leaking somewhere." And I'm like, oh, it should be, a couple $100 to fix. He sends me the invoice. It's like, yeah, it's gonna be about $4,000. I'm like,
oh boy,
fuck,
Yeah.
like, God damn it.
There goes rental income for the next 6 months.
Yeah, exactly. For the next,
HVAC unit. Yes. I paid in cash. I got my HVAC for a small condo, $5,000, and that's every 20, 30 year replacement, sure. But you're like, it does pop up, right?
And you're like, you got to be ready for that kind of stuff.
Yeah.
If you're not, then like, what do you do?
Yeah. You're taking out more debt, and that, it's never good.
More, and like, it's just going to snowball into a bunch of other problems.
Yeah.
Like,
so that's
to have some money in the bank.
Yeah. Yeah. That's a big thing that we take a look at, post-closing liquidity. And sometimes it's the difference between getting approval and a denial. Simply put, if I'm lending to a guy trying to buy $1 million business, and one guy's got, let's use two different guys, for example, one guy's got 200,000 post-closing and one guy's got 10,000 post-closing. I mean, who do you think the bank is going to get more comfortable with? It's a no-brainer. So that's the fourth factor we take a look at. And then the fifth one is experience. It's kind of funny how many folks are, and I appreciate the ambition, but how many folks, that have zero experience in an industry are trying to come to me and buy a business that like they don't know anything about. Nonetheless, they're getting on like our initial intro call and still haven't even done any research about the industry. I'm like, hey man, at least show up to the call with like some data, or at least like act like you know a lot about the industry, or vice versa. Like I was working on an active deal I'm working on right now is an HVAC acquisition in Kansas City, and the buyer has no direct industry experience, which is a bigger risk for the bank. He's got almost 2 decades worth of chief operating officer experience, but it's all in the financial services industry, specifically in investment advising. But we had a borrower call with the underwriter last week, and like he knew so much about the local KC market. He knew who all his competitors were. He could speak to pricing on the different services that the business he was looking to acquire provides. And I think that really, really helped the underwriter issue an approval on that. It was one that I could have seen going either way. But ultimately we were able to structure it and issue him a commitment letter on that one. But yeah, experience is a big one. We hone in on in the acquisition space with these SBA loans. My general rule of thumb there is 2 years of direct industry experience or 3 years of indirect industry experience. We're not looking for rocket science experience. Just, hey, have you been a manager before? Do you have financial or accounting experience? Do you have sales experience? That speaks volumes. Sometimes a business has really good management and operations in place, but a lot of these businesses have no marketing. Like you go to their websites and it's like haven't been touched since 1995. So those are things we're looking for. And maybe if you're looking to acquire a business later on down the road, start positioning yourself now to have that resume for that, or maybe even try to go and work for that type of business, work your way into an assistant management or general manager role. Cause that speaks volumes to a bank. We'll take more risk on someone that has maybe less post-closing liquidity, but has 10 years of direct industry experience. Like we love to lend to the general manager that's been running a business for a business owner for the past 5 or 10 years. I mean, we essentially look at it like minimal risk, transition risk, because transition risk is a big thing. So all these things kind of work together when we're taking a look at these SBA loans. Like, hey, is our debt service coverage ratio strong? Or if it is super strong, maybe we'll take a look at doing a loan with a lot less collateral on it, or vice versa. Like if a guy has a super strong credit, we'll take a look at doing a loan with weaker debt service coverage ratios. I've spoken a lot about the business acquisition side, but commercial real estate's a big thing that we do a lot of as well. And the unique thing about the bank that I work with now is they do no money down for commercial real estate purchases.
Really?
And I know like you're like, what's the gimmick? What's the caveat? There really isn't anything except for some things that we already discussed, mainly just a debt service coverage ratio. We need to be able to see that this business is going to be able to repay our loan. But other than that, and some of the, the credit scores and all those other things we talked about, we don't require any money down for commercial real estate purchases, pure commercial real estate purchases. So for example,
does that include 5 units or more on resident, or 5 unit more on residential?
Keep in mind, I can't do any residential.
But like it's something that you could turn into like an apartment, like it's basically an apartment.
Not an apartment, but if you're doing Airbnb or something along those lines, we could definitely look at doing it.
Short stay.
Yeah, shorter term, as long as it's eligible with the SBA program.
Gotcha.
Yes. But this program specifically is tailored to small businesses that have been in a space but have maxed out that space and want to get into a larger space. Conventional banks are going to require 20% down, maybe sometimes even more if the economy is a little bit rougher. Not every small business owner, especially if they're looking at $1 million or $2 million piece of property, has 20% to put down. With the 504 program, you can put 10% down with the SBA, but sometimes they don't even have 10% down, or maybe they do, but they want to save it to reinvest in the business to keep on growing. So the thought process behind it was just more of a rent replacement type of thing. Let's get you out of whatever space that you're leasing, or maybe you own the space that you're in, but you need more room. We'll take a little bit of risk by not requiring an injection on that loan, knowing that we'll have the commercial real estate as the collateral on it. But as long as the cash flow is there to support it, we'll do that with no money down. We wrap the closing cost. And there's also what's called an SBA guarantee fee on every loan. We'll put that all into the loan. It's a 25-year note with an interest rate of usually somewhere between 9 and 10.5%. Interest rates are a little bit higher with our program compared to mortgages or conventional loans because there's inherently a little bit more risk. But yeah, no, it's a great program for the right individual or right small business owner. And what's funny is when you run the numbers, a lot of the time our payment on our loan is very similar to what they're paying in renting. So I don't know why it's overlooked in the commercial real estate world and the small business ownership world. Cause like on the residential side, most people know like, hey, you shouldn't rent for the rest of your life. Like is there certain times to rent where it makes sense? Like, hey, I don't know if I'm going to live in this city for a long time. Probably not going to buy. I'm going to lease for a year or two. Right. But you kind of learn, whether it's through a personal finance class or someone else reading a book, hey, like buy, build equity, even if it's minimal equity in the first few years, because you're paying mostly the interest payments on the mortgage balance, but buy. And I mean, I just apply that philosophy to commercial real estate with small business owners. You want to buy, like, do you plan to run this business for the rest of your life or for at least the next 5 to 10 years? If so, why wouldn't you try to buy and build some equity in a piece of commercial real estate? And then later on down the road, if you do sell your business, lease that real estate to that business. And then all of a sudden you have a form of passive income that you can collect on and help fund your retirement. Or you can sell that real estate, hopefully for an appreciated value 5, 10, 15 years later down the road. I just apply that same philosophy to small business ownership world.
Now, we talk about the process of getting pre-approved and all that stuff to purchase a house. What are your recommendations on getting pre-approved? Like, do you recommend people going through the whole underwriting process prior to, like, having an idea of what they're wanting to buy, or are they these people finding businesses that they want to buy and then coming to you?
Good question. We see a little bit of everything. I would say if you're interested in getting an SBA loan, just start by reaching out to an SBA lender. Get knowledge, get educated by that SBA lender. There's a lot of people that go online first, do all this research, and then come up with these notions in their head of what it should look like. And that can be vastly different than what it's actually going to look like. So go talk to an SBA lender. Give at least 3 of them a different call, because every lender can vary quite a bit. Think of it like a real estate agent or anybody else that you're going to get a service from. Build a relationship with them, trust them, see what they have to say about it. And every bank may have a little bit of a different appetite in terms of like what businesses they want to lend to, what size standards they're willing to lend to. So I would say start with a conversation first. Not only to be mindful of your time, but to get that education. And then to that lender, if it's a good lender, they will coach you through the underwriting process. Like, yes, I work for the bank, but I tell all my clients, I'm on your team just as much as I'm on the bank's team. Like, I need your loan to get approved for me to keep a job with the bank, right? It's kind of like right. You too. Like, you got to present the file and make sure it's something that the bank's going to approve, or, right. You're not going to generate any business. So I spend a lot of time coaching these folks, educating these folks. And a lot of it is time that I don't end up getting paid on. And that's all right, because the few deals that do close are very rewarding. But I mean, for example, like, just to give you some statistics, when times are good, I maybe close 1 out of every 10, 10 deals or 10 loans that I take a look at. So that's 9 conversations, anywhere from 30 minutes to an hour that I'm having that I'll never see a return on. And that time adds up. When times are bad, maybe 1 in 20 loans that I can get approved. It's just the nature of the beast and how the financials look for a lot of these small businesses, unfortunately. I would say start there. I kind of said don't look online, but maybe look a little bit, get some of the basics online, maybe go to ChatGPT and put a few questions in, see what it spits out. But I would just go to your local community bank or reach out to someone like me. Just go online and or maybe get a referral from a CPA. And then, if you're working with the right lender, everything will fall in place. And if you get a feeling, or if you're just not connecting with that small business lender, move on to the next one. There's too many of us out there nationwide for you not to find one that you vibe with and you fit with. So
now you can lend all over the country.
Yeah. So I joined Venturis, which is a division of Heritage Bank. Just to give some more context, Heritage Bank is actually based in Cincinnati, Ohio. So they don't even have any branches in St. Louis. I'm 100% remote. But the reason I joined this bank, as opposed to maybe a small local community bank in St. Louis where I live, is they're willing to go nationwide. So I spend about 50% of my time working on loans in St. Louis, but the other 50%, I'm working all over the country. I mentioned I'm looking at an HVAC company in Kansas City. I did a loan for a dental practice in Miami not too long ago. I'm looking at 2 gyms, actually, one in Destin and then one in Nashville right now. gearing up to submit a manufacturing company based in Houston, Texas. So, we go nationwide. We are what's considered a preferred lender, which is a designation granted to us by the SBA, granted to the bank specifically. And essentially that designation is given to a bank that in essence is a master in SBA lending. If you're not a preferred lender, you have to underwrite your loans and then send them to the SBA, have the SBA underwrite them before you can close them in-house. Whereas we can underwrite and close a loan in-house at the bank without ever having the SBA opine. So that's another thing I would mention. Anybody listening or interested in SBA loans, make sure you're working with a preferred lender. And I even tell my clients that, like, hey, if you don't end up going with me, just make sure you're working with a preferred lender. There's too many good preferred lenders out there.
Yeah, it's like on our side being a direct lender.
So yeah.
Like we're directly underwriting through Fannie Mae, Freddie Mac, FHA. There's no added overlays or anything like that. It's just stuff that we do on our side that most don't.
Yeah.
They're usually just going through a broker who then has got their own underwriting and things like that. So I say the same thing. Like if you're working with somebody, make sure they're a direct lender.
Yeah. Yeah. It's,
that
was key.
It makes it easier.
Yeah, no doubt. Because what happens is you get these other banks out there that aren't preferred lenders. You get in touch with a lender. Hey, do you do SBA loans? Oh, yeah, we do SBA loans. You know, we love doing them over here. Well, in reality, they maybe do like one or two a year. And most of what they do is actually conventional lending, but they don't want to lose the business, you know, and so they'll tell you they do them. You get in, you start working with them, and all of a sudden it turns into a 6-month process. And it start to finish, if you're on top of everything, it should be a 2-month process, maybe 3 months if there's some speed bumps along the way. Whereas a lender like myself, this is all I do. I don't do conventional lending. I don't do mortgage lending. I don't do consumer lending. All I do is SBA loans for small businesses. And there's a lot of us out here that specialize in these loans specifically. So I would say make sure you're working with a guy like that. I've heard so many horror stories about people being like, oh, it was 6 months for me. That's not normal. And I'm like, no, like, what were you guys doing the whole time?
Jeez.
So,
well, it's like, I'll say the same thing on the mortgage side of things too. Like I always recommend people, go use a mortgage lender, someone who does, all they do is mortgages. Like he's a specialist in this one field. Like, I just feel like you're going to have a lot better experience because that person's got a lot more experience.
Yeah.
Yeah. The amount of text messages I get from agents like, fucking guys using this bank and it's a pain in the ass and it's
I'm doing with one of those right now.
Yeah.
You're talking about me.
You're one of 3 agents that I've gotten text messages all from in the last week.
The same one too.
Yeah.
The same one that's always giving me problems. Anyway, you mentioned 50% of your business is not here locally to St. Louis. So like how are you finding those leads for like people not here? Obviously it makes sense, through your network here in St. Louis, like how you locally know business owners or people that are wanting to acquire these SBA loans. But how do you find your leads, like the Miami one, for instance? Like, how do you come across these people?
LinkedIn's huge.
Okay.
Cold calling, I go back to, why I hated the 3 months I was at Mass Mutual, and it was nothing to do with Mass Mutual. It wasn't a good fit for me, the life insurance world. There's a lot of great guys that do really well in that world, but it's a very tough grind, especially as like a first job out of college. Like you're pretty much just like, hey, go find business. And where do you start? With contacts in your phone, and you're calling your friends and family to try and sell life insurance to them, and they might not even need it. And so that makes it 10 times harder. But I really am grateful for that experience because it makes cold calling in this industry so much easier. Like so much easier. And it's same with you guys to sell something to somebody that like they need. So for example, business brokers are guys that are just like real estate agents, except it's with businesses. They list businesses for sale and help and buy and sell them. So I'll cold call them. They need me to finance their deals, just like you need a mortgage lender to finance your deals.
Okay.
And so, do I get a lot of turndowns? Absolutely. But I do get a lot of receptiveness to these cold calls. And, I'm just very honest, very polite. I don't expect anything when I'm cold calling them. Just, hey, would you be interested in entertaining a conversation about, what we do over here? And I offer free services to them as well. I do free pre-qualifications for business brokers. So, so let's say a business broker has a business they're getting ready to list. What they'll do is reach out to me and say, hey, will you pre-qualify this and make sure that the cash flow supports the purchase price that I've been on it? Because that's the business broker's main job, is to calculate a purchase price for the business. Like, what is this business valued at? And, keep in mind, they're trying to value it as high as possible, almost kind of like a real estate agent is, because their commissions are based off that purchase price, right? But they also would need to make sure that the deal is financeable, or else it's just never going to sell. So I'll offer that. Like, hey, I'll give you some free services with the hope or expectation that you give me a deal or two later on down the road. Another big one has been conferences. So I'll go to what's called the IBBA, International Business Broker Association. It's this huge, I would imagine, 1,000+ members organization that is made up of mostly business brokers, mostly in the United States, but there's guys all over the world that go to this. Like, I'm shocked to see at this conference every year. I mean, I met a guy from Australia last year. I meet people from like Europe that come to these things, Canada. But I go to that. It's a yearly conference. The past couple of years, it's been in Orlando. They've done it in Nashville, Denver, which is cool. It's always a fun city. And then there'll be anywhere from about 600 to 800 of these business brokers there. And so it's just prime, it's almost like you going to a conference for mortgage brokers. Imagine 800 of them being there. Right. If I can squeak out with 10 or 20 solid connections from that, I'm a very happy man. But, I'll meet them in person there and then follow up, nothing crazy. Yep. Yeah. Build that relationship. And not every phone call is, hey, do you have a deal for me? It's just like, hey, what'd you do this last? Yeah. What'd you do this past weekend? Like, how shitty was
the kids?
Yeah. How shitty was your golf score over the weekend? Or yes, I love sports personally. So, there's a guy out on the East Coast. He's a huge Carolina Hurricanes fan, and I'm a huge St. Louis Blues fan. So I'll just, I listen to a Spit and Chicklets podcast every week. And, if there's something juicy on there, I'll call him. Hey, did you hear about XYZ? Or, they had a big trade last season. So yeah, I'll build that relationship and not always make it about business. Sometimes it's really just trying to be genuine and getting to know that person. But conferences are one of the better opportunities. But post-COVID, the world has just become so Zoom, email, call oriented, which I like, because before then it was definitely harder to build that relationship. People weren't as receptive, especially older people, people 40, 50 years old that didn't grow up around laptops and Zoom and video calling and FaceTiming. Like, it was a little odd for them to maybe get a cold call out of nowhere, from an SBA lender. But that's really it, and it's not easy. It's a grind. I'm in my 3rd year now. It's going to be my best year yet. And, I feel like I'm really turning a page, this year and really looking to build on it. But, it takes it. You don't get a deal on that first or second touch. I mean, maybe if you're lucky, it's that 5th, 6th, 7th touch. And then you got to keep having those touches. If you lose contact with that person, you're just out of sight, out of mind. So you got to stay in mind. Thankfully the bank does a little bit of help too. They send out marketing emails, to a database of contacts that I've kept. An online presence helps. Like I said, LinkedIn. I've designed my own personal website too. The people, they just Google SBA lender in St. Louis. It usually pops up on that first Google page. Friends and family too. As I've gotten into this world, some of your friends and family can be your best referral sources. So that's it. Yeah. Just getting out there and just letting people know what I do, educating them on it as well. I think when you can demonstrate and provide value, about the program, that really sells itself to people. That, that's what people are curious about. They go online and read all this stuff, but they don't know what's true and what's not. So when you can validate it as an SBA lender, that really gives them some reassurance and kind of reels them in for you. But yeah, it's a grind developing those relationships nationwide. Another thing I do too, and not everybody has the luxury of doing this. I'm single with no kids, so I do a lot of weekend traveling. For example, I'm going to Tampa this weekend to visit a buddy St. Louis buddy that relocated down there. The week before, so I'll look up business brokers in the area, cold call them. Hey, I'm going to be in Tampa on Friday.
Let's go grab a coffee.
Well, yeah, you open to grabbing a coffee or lunch. Like most of the time, I'm not even like when I'm on that visit, I'm not even doing anything from 8 a.m. to noon that day anyways. This trip, we're going to do some deep sea fishing and some other cool stuff, but or maybe I'll work an extra day into the trip just for business purposes. And so I'll do that. I'll cold call somebody, spend an extra day in town and just take them out for lunch. Hey, you want to go golfing? I was in India a couple weeks ago. Did the same thing, going to California in a couple months for a wedding. And I'm going to do the same thing on that. Just, go in a day early, schedule as many meetings as I can for that one day. And then that personal or that in-person touch is notable, and then follow up phone calls, emails after the fact. So yeah, no magic over here happening. Although I am interested about maybe some fintech out there with how online and digital the world has become. I know social media has been huge for you. So I do question, hey, what am I missing out on by not engaging with some of these fintech firms? But I still think old school traditional marketing, there's a lot to be said for it, because in my space, most of the business brokers I work with are 40 plus. Nobody graduates from college and goes into business brokerage. A big reason being it's all commission based. Like there's no salaries in the business brokerage world for the most part. So it's usually more established folks that can take that risk that go into that world.
Which is crazy because coming right out of college is the perfect time to do that.
It's a good opportunity. Like the younger, hungrier guys do better in the business brokerage. It's a role where you get out what you put into it. And so you got these guys that actually keep more of a 9 to 5 than business broker on the side. And they maybe get a deal or two done a year. But when you got these other guys that are super hungry and go full bloat into it, they'll start generating 5, 10, 15 deals a year. And I mean, that can be a couple 100,000, sometimes $1 million plus in commission checks for them. So yeah, podcasts help too. Yeah, thank you guys for having me on.
Well, is there any I know some banks and stuff have restrictions about allowing social media and stuff like that. Do you have any?
I don't have any set criteria or guidelines, but it's just more of a common sense rule. Just don't post anything out there that would make you or the bank look bad. If they see something stupid, I might get a call from HR. Most definitely. There have been times where I wanted to post things. This was the previous employer that was a little more conservative, and they're like, I'd prefer you not, type of thing. Where I was trying to interpret some new rules that had came out. You kind of walk a fine line of maybe misinterpreting those rules or regulations. And so that he was just trying to look out for my best interest. But there's actually a guy in the industry that was working for an SBA shop. Just loved Twitter, and that was his outlet for his emotional side. And it got to a point, and a lot of this is hearsay, so that's why I'm not going to name names. But the guy, it's my understanding, the guy in his tweets had gotten a little aggressive. The bank had reached out to him, was like, hey, we need you to pull back on this or else we're going to have to let you go. And he kind of told the bank, go ahead and just let me go. Actually ended up starting his own brokerage. So there's guys out there that broker SBA loans. They're kind of a middleman between myself and the small business owner. They source them and then they'll refer these loans to the bank, and then the bank will actually pay them a referral fee on these loans. So at my bank, we start out paying a 1% referral fee to guys like you if you refer a loan to us. Cool. And so he went out, kind of told the bank to take a hike and started his own brokerage for SBA loans, and he's killing it. I think he did $50 million in volume in his first year as an SBA broker. And he tweets whatever he wants, whenever he wants. And maybe he loses a couple deals because of it, but I think he gets 10 more because of
people like it.
Yeah.
People like it, people like to see that personal side and that genuine side come out, whether it's on Twitter, LinkedIn, in person. We're all human. And I think people really like to see that, especially in a world where AI is blowing up and things are becoming so robotic. We're losing a lot of that. I actually am trying to avoid using ChatGPT because I think you lose a little bit of your creativity, or you will in due time. You'll become dependent on it, just like you you would if you were on a drug or something like that. It's an extreme example, but it's definitely valid, and that you're gonna get to a point where I don't have to think about this. I'll just go to Cheppy and cheat.
Right.
Well,
they'll think for me.
What if your phone's dead that day? All of a sudden you got to start spinning your wheels, and maybe they're not spinning as well because you haven't used that part of your brain for 2, 3, 4 years. So I walk this fine line of dabbling with ChatGPT, but also trying to avoid it, and just using, my own creativity, whether it's an email, a post, or something along those lines.
Yeah, I mean, that's what we like about this. I mean, we can't do this in AI. We get to have conversations, sit down, like it's just us.
Really get that whole personal side.
Right.
You get to really feel who we are.
What are we, 180 episodes in? We can't fake who we are for that long.
No.
So we've got hundreds of hours of us speaking on the internet at this point.
Yeah. And hey, I haven't seen as many of your guys' podcasts compared to some of the SBA guys that I follow, but some of the best SBA lenders out there are getting their business from doing good podcasts, short podcasts, simple podcasts where they're just educating these small business owners on what you can and can't do with this SBA program. I think there's a lot to be said for it.
Oh yeah, and then you can take the clips and throw the clips on social media, and then educate people through that too. I mean, it's like such a multi-purpose thing. Obviously you post the long form podcast, but you can also like the clips, and then we also do like little medium segments too that we post on YouTube as well. So like, for this episode, he typically picks out like 3 moments where maybe we stayed on a topic for anywhere from like 5 to 20 minutes, and he'll like post that in addition to the full episode, which some people don't want to sit there and listen to an hour and a half episode or whatever, but they'll listen to 20 minutes or 15 minutes.
Yeah.
And I think that those are cool too. I mean, some of those will get a lot of views too. So
and it's just bringing in more people to the page.
Yeah.
So like I said, I mean, we don't really talk a whole lot of real estate or mortgage stuff on here. It's more.
It depends on the guest.
Yeah.
Like this one's definitely been more of a finance type talk, which is what we expected. But I mean, there's times where we'll have people just ramble on like Rob Odom.
One of our most popular episodes. The guy just told like crazy military stories the whole time.
There's something to be said for that, man. I was at a wedding a couple months ago with a buddy of mine, more of an acquaintance, but good guy nonetheless. And he was in the Navy for 8 years, and that's one of my favorite pastimes, asking military guys stories. Obviously stories that they can tell. And it's more so the fun, exciting ones, some of the excursions they get to go on. And I enjoy it. I understand why Joe Rogan has a lot of military guys and FBI, ex-FBI agents on, because there's juicy stuff that comes out of it,
Oh, dude, so good. Did you listen to the one where, I think what's the guy's name? But he was a undercover guy he was undercover for the FBI, and he like infiltrated like a bunch of like
gangs,
like KKK groups, a lot of like
his name's on the tip of my tongue.
He was on Armchair Expert too. He's like just that giant like he kind of looks like Jason Momoa or something.
He blends. You understand how?
He's like he's covered in tattoos, long like ponytail. Like you wouldn't expect him to be an FBI agent. That was like one of my favorite episodes I ever listened to.
Yeah, no, those are some of the best ones. I'm excited to see, specifically what comes out with Joe Rogan, and even the next couple of years or two. I just feel like there's this shift with the United States and with
media,
the FBI and media, and just what they're releasing. Like, I just feel like there's a tipping point happening where we're just getting a lot more truth about our government, good, bad, or indifferent, mostly bad, unfortunately. Right. But nonetheless, it is good to hear the truth. Unfortunately, like some of this stuff is going back to the 50s and 60s, and we can't really do much about it now, but we can learn about it, and we can learn from it, and like learn what not to do moving forward, right?
Well, it's just amazing to think like that's how, like, going all the way back then and what they were doing back then to like, shit, what are they doing now that we don't know about,
Yeah.
Like, it's going to be another 50 years before we really find out the shit that's coming out that we're living through right now.
Yeah. I don't trust the government for the most part. I take everything they say with a grain of salt. They do a lot of good, and I'm over here repping SBA loans. Right. I think the SBA is really good. It's one of the few, if not the only, government agencies that's run at a surplus for the past, ever since the 50s, actually, until Biden came in. That was the first time it ran at a deficit. But Biden's out, the new administration is in, and we're back to hopefully working at a surplus with some minor tweaks here and there.
Was it due to the PPP? Is that why it wasn't?
No, it was. I would need to be on the inside to really pinpoint exactly what it was. It was more so how things were structured. And it's not specific to Biden. There's obviously an SBA administrator who really is the one that should be fully responsible, but the administration is definitely providing insight and thought when the SBA administrator is making changes to the program. And high level, they made the program, they pulled back some rules and made the program a little bit freer, a little bit easier to get access to small business lending, and that resulted in the program taking a little bit more losses on defaults on loans than they were typically used to. They also removed some of the SBA guarantee fees, which is really the revenue driver for the SBA, or reduced them. And that is what caused somewhat of a deficit to happen with the program. Well, the new administration came in, they reinforced some of the old SBA rules that the Biden administration had pulled back. And then they also upped the SBA guarantee fees to what they were at historically. And we'll have to see. They run on
Are those guarantee feed financed back into the loan?
So they are financed by the loan, and just to give some more context to what those are, an SBA guarantee fee is on every loan. Every small business owner has to pay it, and think of it as an insurance premium on the loan. It's kind of like PMI. Yeah, exactly. It goes into a pool at the SBA, and what it does is it covers losses on SBA loans that go bad. So unfortunately, if your loan never goes bad, you'll never see that money again. But it's also the price that you're paying for getting an under collateralized loan where the SBA is putting a 75% guarantee on that loan. Otherwise, good luck trying to find a loan elsewhere. Again, you're going to private money for 15%+, or you're going the private equity route, and then they're all of a sudden putting all these triggers in where, next thing you know, the private equity company owns 80% of your company and you have no controlling power over it. So yeah, that's what that guarantee fee is for. Regardless of what bank you go to, we all have a calculator that the SBA gives us. It's the same fee. It's based on your loan amount. So even if you go to another bank, but you have the same loan amount, the guarantee fee is going to be the same. So that's all it is. It's just an insurance premium. But that's
the same thing on the mortgage side. Cause like FHA, you've got 1.75% that's financed back in plus monthly. You have two, USDA, you have two the upfront fees, 1% financed back in, and then you have 0.35% per month. And then VA is the only, they have it, but if you collect VA disability, you don't have to pay it. And there's no monthly on that. So all three government programs have it. I think it's just it's just smart.
Yeah.
I mean, it's going to be back. You're essentially getting, it's geared more, like FHA is geared more for lower credit scores. So a little bit riskier of a file.
Or a guy like me, my first acquisition or property I bought, Brentwood Forest, bought a property with 3.5% down. And I wouldn't have been able to get that without an FHA. I literally had, and it's funny, kind of going back to my post-closing comment on the SBA loan side, I put everything I had in my checking account into this property, and got it. That was my main MO coming out of college, buy something as quickly as possible, because I knew I could get a buddy in there to rent from me, cut my mortgage in half. And I'm glad I did. It worked out well. But yeah, it's awesome that we have these programs out here.
I did the same shit, man.
Yeah.
Dude, before I got into real estate, like I was so bad with money. I mean, like 7-8 years ago, like, man, I pretty much spent every dollar I made every month. Like I was so bad at saving, and like, I just didn't think about it. I was like, I need, this is the lifestyle I'm used to living. So like, I'm just going to spend it and hope it works out.
Yeah.
Thankfully it did, but definitely not the best strategy.
Yeah. Pivoting to real estate here. Going to ask you guys a few questions, if that's all right. I've talked enough. Where do you see the St. Louis real estate and mortgage industry heading over the next couple of years? Any concerns? Anything you're super bullish on? Kind of hard because nobody really knows what's going on with the economy, but everything for the most part looks pretty promising. There were some question marks maybe 6 months ago or a year ago. When I say the economy, I'm talking on a national scale, but when I'm talking about my question, it's definitely geared more towards St. Louis. Where do you guys see it going? over the next couple of years.
Yeah, I mean, if you're out there waiting for prices to come down, I don't think that's going to be happening. So, I mean, everybody out there that is, if you're concerned about the value of your property, plummeting and people able to purchase a lot more, like I don't see that happening. We just have too much of an inventory issue here.
Yeah.
Like right now, still to this day, I mean, right now we're starting to kind of see a shift in the market where, at my sales meeting yesterday at my office, they said that 42% of listings nationwide that are currently on the market have done a price reduction. So that means that they've been sitting for long enough that the seller's willing to drop the price.
Yeah.
So it's just kind of, there's like a national trend of houses being overvalued. People are seeing, the 2023 or 2022 prices when everything was at like sky high, and they're trying to use those comps, and there's not, the demand isn't there due to, I would say mostly because of interest rates, because they weren't what they were years ago.
Yeah.
But I mean, you can still get a good deal right now. But also on the other side here in St. Louis, I'm still seeing like the right houses get several offers.
Yeah.
So it's like, it's kind of a, I say that it's kind of contradicts what I just said, but it's so property specific. So I don't see prices going down anytime soon. I still think, it's a great decision to buy real estate. I think it's always going to be a great decision. I mean, I think long term, I mean, it's one of the safest investments that you can buy. So yeah, I don't see anything. I don't see prices going down. I mean, I would advise if you don't own a property now, I think it's a good idea to do it now because it's only going to get more expensive.
Yeah.
It's like
prices are only going to go up, generally speaking. Are we going to have downtimes? Are we going to have recessions and depression?
Yeah.
Maybe, hopefully not a depression.
Too.
Yeah. But if
thing.
you're young, you're going to see that bounce back, 10, 20, 30 years from now. And I like your comment about real estate investing, especially as a finance guy. You got crypto and you got stocks that you can invest in. The one thing that I like about real estate is it's the only asset that you can invest in that is tangible and isn't moving. Right. Stock is digital. Like the stock market crashes, there's nothing you can go and pick up that has value, like tangibly. Right. Crypto, I have a little bit. I'm not against it, but super volatile, super speculative. And it's really only worth what somebody's willing to pay for it. Same with real estate, but say the world goes to shit. That real estate, you still own that piece of land. You still own that piece of property, whether the economy is tanked and the world has gone to shit or not. And so that's really what stands out to me about real estate. What I like the most. It's the only thing that literally isn't going to move anywhere. It can't grow legs and walk down the street. So that's what stands out to me.
Steal it from you.
Yeah, exactly.
Well, and talking about crashes, I mean, I think since the Great Depression, home values have only dropped 4 times.
Yeah.
So it's okay. Good luck on timing it. Like, when are you? We don't know if they're going to crash. Honestly, I think the next thing to happen that could cause home values not to crash but just level out is this silver tsunami they're talking about.
Yeah.
Older generation baby boomers, the middle of the generation baby boomers, once they start passing away. But on the flip side of that is it's going to be so hard for people to find homes that a lot of this stuff, and if they're smart, they'll have put in a trust or they'll have gotten it to a family member that a family member is going to be buying.
Yeah.
So it's still...
Or it could create a huge opportunity.
It could.
Mm-hmm. I'm glad you brought that silver tsunami up because it's something that's talked a lot in the business acquisition space with SBA lenders. I think we're already kind of in the beginning stages of it. But a lot of these boomers own, I'm just pulling a number out of my butt here, but like, I don't know, 80 to 90% of small businesses. Wow. And those businesses, this wealth has to transfer in some way, shape, or form. These boomers own most of the wealth in the United States and in the world. And so we're excited in the business acquisition space because we know a lot of acquisitions are going to have to come in some way, shape, or form, whether it's a dad selling to his son or selling to some random buyer. They're going to need financing for that. So that's why we're excited about it. And I would think that the same theory would apply whether they're inheriting it or they got to sell it. I'd actually be curious. I don't know how you could calculate this, but I'd be interested to see how many boomers are living in a home versus an assisted living facility. Like, I wonder how many should be in an assisted living facility and should be is up to the mind of the beholder. But like, I mean, is there a plethora of them that are going to die in the next 5 years? And is there going to be hundreds of thousands of houses that are going to be ready to be transferred over? I don't know, but.
Well, and I mean, there's an agent here that's really big on that. She talks about, living in place or dying in whatever it's called for older people.
Yeah.
But I think we learned through COVID that those assisted living and those retirement communities really aren't that great.
Yeah.
The way they take care of the patients and things like that, and the people that live there, they're not that great.
Yeah.
And so most people are staying put, and I don't blame them. I mean, especially with the cost of living the way it is, and the cost of those retirement communities. I mean, I was just having this conversation with some people at where I live, and it's $7,000 to $10,000 a month to live in these places.
Yeah.
That's a lot of fucking
cash
money.
machines, man.
Yeah, it's a lot of money.
Yeah,
and a lot of people don't have like the long-term disability or the retirements established for that.
Yeah,
so, and they may live in a home that's free and clear. It's just gonna be cheaper to have somebody come in and take care of them in home health care, which is also blown up.
Yeah,
that's been an industry that's blown up a big time.
Yeah, that's another business we finance a lot of. Very lucrative. Yeah. Home health services company. Yeah. Very, very, very profitable companies. Yeah.
Well, and that's the thing is I've helped a lot of those in-home healthcare workers, and they don't get paid shit.
No.
And they're working 80 hours a week.
Yeah.
A week.
It's tough work. I shout out to anybody doing that type of work.
You guys are saints.
Nurses.
Yep.
I have a huge soft spot in my heart for people that are involved in that. I've done a little bit of it, and I wasn't paid for it. It was just helping my grandparents out on the tail end of their lives. But yeah, I'm interested to see how things shake out, just as a guy that has an investment property myself and wants to continue expanding with my portfolio, what things might look like. One of the funniest things I hear from more of my financially illiterate friends is, oh, I'm going to wait till like interest rates get a little bit better. Like, what do you mean, bro? You look at the 30-year average, and I even maybe look at a 20-year, it's 6-7%. Like, in the grand scheme of things, that's a fair rate.
Yeah.
Like, yeah, we got a hell of a deal at 2-3% during the early 2020s, but that's something we may never see again in our lifetimes, and we're 30 in our 30s.
We're never gonna see that again.
We'll be lucky. Yeah,
we'll be lucky if we see 4 again.
Yeah,
definitely. I think we'll see 5s.
And so the message here is, don't wait, people. 6 to 7% is a very fair rate. Make it maybe a few more pay downs monthly. Try to pay that thing off early. But yeah, you can't balk at that interest rate.
Well, and here's the thing too that people look at is they feel like they're going to hold on to this for all 360 payments.
Yeah.
On a 30-year. No fucking chance. Like, I've been in this business now for 10 years, and I've worked with people that say they're buying their forever home, and I get a call 5-6 years later.
Yeah.
And so
you're going to keep expanding.
They've made so if they're there for 5 years, that means they made 60 payments.
Yeah.
Like that, nobody's holding on to this for that. Maybe towards the end, that last house you're buying, when you're downsizing, that's when you might want to consider one of these shorter term things, or possibly buying in cash.
Yeah.
But ultimately, people need to look at when it comes to buying on the mortgage side of things, short term, and here's the thing too, like we're in a unique period right now where we're starting to see more homes at the market, but interest rates are still high enough to keep a lot of people off from being able to buy. Yeah. So I always tell my clients is like, listen, if you can find a house that you like for a monthly payment that you're comfortable with, then you should absolutely buy. If you cannot, then don't. And that's the thing is, like, the ones that can find that, they're getting great deals. I mean, just got 3 contracts over the weekend. All of them came in at list price and had some sort of credit or something like that at closing.
Yeah.
And those are things that you haven't seen in a long time.
Yeah.
I mean, a lot of the files that I'm having come through now all have some sort of credit at closing.
Nice.
And, or they're not in a bidding war and they're getting it at the list price.
Yeah.
And so, we are in a unique time, and I think people should take advantage of that. Yeah. If they can find what they want for a payment that they want, because when rates drop, they're always going to refinance, and that payment's just going to be even better for you. Plus, you're gaining interest, it's appreciating. Plus, odds are your income's probably going up as well with it. So it's just going to make things better for you overall financially.
Yeah.
So there's a lot. And then I also got into a debate with somebody who's younger than I am, and is a mortgage lender, and he thinks we're going to be eliminated by AI in 10 years. So I'm like,
Yeah.
We're already starting to see some of it in our jobs in terms of like automated underwriting systems that we run files through. And, in terms of income calculations and all these things that are coming through, but I still think people are going to want that human touch. And I was like, sure, maybe the generations that were born, what Gen X is the one. What is that? We're millennials, and then
is that Gen Z next?
Google it.
Yeah.
But yeah, they're the technology ones. But like even people that are our age, like they're on their first, maybe second home, but they probably have 2 or 3 more homes that they're going to buy. They're not going to want to rely on that. So
I agree. For the foreseeable future, I want a personal touch. I want somebody I can ask questions to. There's just a certain level of confidence I get with a human versus AI. And speaking of AI,
Gen Alpha.
So
it goes millennials, Gen Z, Gen Alpha. So it was baby boomers, Gen X, millennials, Gen Z.
What are 31-year-olds?
31-year-olds. We're millennials.
Okay.
Millennials run through 96.
Okay.
Yeah, so it says right here, millennials are current age 29 to 44.
Okay.
So
speaking of AI, this kind of alludes to some things I've heard on a lot of Joe Rogan podcasts, but I wonder if there's going to be any regulation that comes down on AI replacing workers, because there's something to be said. I know you guys probably listen to a lot of Joe's podcasts, but like there's something to be said for having a job that gives you meaning just in day-to-day life. And if you strip that away from someone, what happens? I mean, they lose meaning, they lose purpose. Odds are they become depressed. And, where does that put us if a majority of the population essentially loses meaning? Well, essentially we're all going to be depressed. Like, what does that look like? Does the government step in and say, hey, we need to stop this, or else we're going to have hundreds of millions of people run around and causing chaos, essentially? Like, for better, for better, but for worse, when people are bored, they tend to get in trouble. They can't tend to do shit unless they have
the idle hands of the devil's playfield or playground or whatever.
Yeah, exactly. So I wonder if the government steps in at some point and puts a cap on this.
I think. I mean,
there's so many jobs out there that could potentially be lost to automation.
they're already starting to go, right?
For sure.
This is a rabbit hole we could really go down, but like, government wants control, right? So would they really be that upset if they now have more control over more people?
Yeah,
and getting people to rely on them.
Yeah, there's 2 sides to it. That's a good point.
Yeah. Well, clearly it's going to be way more profitable for businesses if they can use, automation. And it's like where is that business owner? Like, he's putting up in a tough position. It's like, does he, look at
his bottom line,
or does he have a heart? And
it's bottom line most of the time.
It's going to be bottom line most of the time. Like, that's just how this world works.
Yeah. So what do these people do? Is it, it's just very interesting. I think we live in a very unique time. By the time we're going to see some shit in our lifetime, and a lot of bad stuff, but also hopefully a lot of good stuff.
And we grew up I feel like our age group, this millennial age group, is like such a it's such like a we're such like a transition.
Yeah.
We're old enough to remember like not having.
I was banging on my grandparents' typewriter at 3, but like we're on the verge of ChatGPT 6 coming up, and
I remember having to not having a phone in my pocket and having to use a house phone and like call my buddies and go knock on my buddy's door to see if he can come out and play.
Right.
Whereas now it's like
you ask a kid to call like a house phone these days,
they're
and
not gonna know what that is.
They'd be terrified. Hey, can you call and ask their parent if you can talk to Billy down the street? He'd be like, "What are you talking about?"
I'm old enough to remember the rotary dial.
Yeah, on the wall.
Yeah, we had one at my grandparents' house. I remember.
Yeah. We had one. We had one when my parents first moved in Oakville. Though, was a rotary phone.
Yeah.
It was connected to you had the whole the thing, and you had to be careful because it would start getting static if too far and bounce too much. Yeah.
You go pick up the other line at the other end of the house and try and listen in on the conversation. And then you got PlayStations, and those have evolved, and our iPhones have gone from these like very binary type of systems to you got a full pocket. It's almost a supercomputer at that. So very excited, also very worried to see what we see the next 2 to 3 decades.
Right. Well, just look at what we've seen in the last 2 decades, because I think we're coming up on the 20-year reunion of the iPhone.
Yeah.
I mean, I think it was
scary.
2007. 2007,
Yeah.
I think, was when the first iPhone came out. I mean, and just look at where things have gone and evolved since then.
Yeah.
It is insane.
Yeah. I mean, there's so much research out there, especially for like young girls, and like how negative having phones, or like apparently there's a direct correlation between the invention of the iPhone and like depression and suicide among like high school kids, specifically females.
Well, I mean, especially like it's just the amount of bullying.
Oh yeah,
You know, like,
you couldn't get away from it.
No,
you can't
I
get
mean,
away from
I
it.
remember in high school, I felt like, I was part of a bunch of different groups between, sports and the different sports that I played, and then academics, being in higher academic classes and having those groups and things that I hung out with. But I felt like everybody kind of got along.
Yeah.
Like, I don't remember. I mean, I could.
There's a little bit of bullying.
I could
Bullying,
be wrong,
for sure.
but it wasn't nothing. Like, I don't.
Well, you take away the in-person component of it, and it gets nastier.
Oh,
you
yeah.
know,
Yes.
like you're more likely to be a little ballsy with your bullying
because
you're
not
on screen,
afraid,
right? You're not afraid
to get punched in the face.
Yeah.
Like, that was the thing. I mean, there were a lot of fights. I remember fights in high school. That shit got settled right then and there.
Yeah.
But people aren't afraid to get punched in the face anymore, and I think that's a
keyboard
problem.
warriors.
That's a problem.
Yeah.
Sure.
Yeah. What was that Netflix doc? This Social Dilemma.
Yeah.
Like,
oh, dude,
it's crazy how we all watch these things, and then it just kind of goes by the wayside. But I mean, that was just true data right there that shows like, hey, there's definitely a dark side to this stuff. And that's why a part of me pushes back on getting too acquainted with technology. I do it enough to stay in the know and stay competitive with my day-to-day job, but I try to stay away from it as much as possible. I let other folks be the guinea pigs, and then I'll follow lead if I feel the need to.
Yeah, I'm okay being last to the party and stuff like that.
Yeah, no doubt. One other question. Pat, are you a father?
I am.
Nice. How many kids you got?
2.
Nice. What are their ages?
5 and 6.
Awesome.
Some
Well,
Irish,
I'm
Irish twins.
I've got everything else figured out in life, but the one of the main dreams I'm still working towards is getting settled down and having kids. And so I wanted to ask both of you, what's one lesson fatherhood has taught you that you didn't foresee or didn't expect before you were a father?
You want to go first?
A couple things. I mean, one, patience for sure.
Yeah.
But the biggest one, probably unconditional love.
Yeah.
Like, never met this kid before, and he comes right out, and you're just, oh, this is mine. He's
piece of you, your DNA.
Yeah. And so, and like, I always was like, man, how, you watch these kind of a twisted look on this, but you watch these docs, and like these parents of these mass murderers are like still there loving their kids. And like, I get that now. Like, that's my kid, no matter, like, that comes back on me. I might have failed him in a way, but that's my son. I'm always going to be there. No matter what he did, I'm always going to love that kid. Like, he can come in and try and kill me, but I'm going to love that kid forever. Yeah. And, that's the biggest thing. That's the biggest thing I've learned from all that. And then, next to that is patience, because nothing ever goes as planned.
Yeah.
So you just got to be able to just kind of roll with those punches and be patient with how things are going. So
I'm sure a kid will teach me much more patience, but getting into golf the past couple of years has taught me a lot of patience. But I'm glad you shared the unconditional love thing. If there's a fault of mine or something that I could work on more, could definitely be the unconditional love. I have a lot of love, and I definitely share it. But to do it when it's hard to do it is the unconditional part, right? Like, family members maybe piss you off, and then all of a sudden they're asking you to help with something, and there's a party that's like, well, you didn't do X, Y, Z, or you treated me this way, and I don't really care to help you, but you got to bite your lip a little bit and show that love for them. So maybe that's something I will try to implement and focus on moving forward. I appreciate you sharing that.
Yeah, of course.
Yeah. I'd agree. The patience and the, and the unconditional love. Like I mean, like Pat said, when that, like our first son specifically, like I remember, he was in the NICU for like a day before we were able to like bring him up to the room where we were. And so like Gina just had a C-section, so she couldn't get up. So I was basically like going down there every couple hours and like FaceTiming her so that she could see him and stuff. And I'm not like a crier. Like I've been with Gina for 15 years almost, and like she can count on like one hand how many times she's like probably seen me cry.
Yeah.
And I just on one of those trips back up to the room, like I'm in the elevator and I just felt like this overwhelming sense of emotion. Like he's, not even 12 hours old. And I'm like, I just felt like I just started like crying and like bawling my eyes out. And I was like, I've just never felt this amount of like.
That's that life-changing feeling that people dads talk about.
It like hit me all of a sudden in this, like I had just put him down. I walked to the elevator and the elevator doors closed and I just like started weeping like I've never like felt that way about anything. I was like, oh wow, like this is what people talk about. And that, and then on top of that, I would say the other thing, it really kind of puts things into perspective for you about like what really really matters in this life. Like like before that I would I love my wife more than anything. Like she's greatest lady I've ever met. My job is super important to me, super fulfilling. Like I really love what I do. I genuinely like love this real estate thing, and like that before they were born, like that was what was most important to me. But then, the second that they were born, like, your perspective shifts and you're like, oh, they're like, I could lose all this. Like I could never sell another house again. And like, as long as I have them, like that's all that fucking matters.
Yeah.
And
that's
so
awesome.
Like, you've always got that to go back on now. Like, do I want to lose my job? Do I want to stop selling houses? No. I fucking love it. But
can this email wait?
Yeah.
Right. Yeah.
Like, can this wait? Yeah. Like
you got your son calling your name or this, that, and the other. Like
yesterday, for instance, like we're on our way home. Like I've got this deal that's, been really driving me crazy. Where, I think this morning we got everything figured out. But yesterday I was kind of like a fucking mess, just like fucking irritated about it all day. But then, I picked them up and I'm like, all right, I need to like just let that fucking go.
Yeah.
And like not think about that. Like I've got these next 3 hours to hang out with them before I'm putting them down for bed. Yeah. So it's like, I need to fucking flip this switch and not be so worried about my phone, worried about what this guy's going to do. And like, him figuring out his whole lending situation. I need to.
Sounds like he's not working with Pat.
He's not working with Pat. I encouraged him to work with Pat, but he didn't want to listen. So, that's over here like, I told you so. And,
no, not at all.
I know. Just
not at all. I gave you suggestions to tell him.
You did.
And
it worked out. It worked out. You coached me through it. So, but so it just puts things into perspective. And I'm like, oh, they're what matters. Like my time with them, me being the best dad I can be, like that. That's what's important. So I would say those are.
On the funny side of parenting too is you're never gonna have a fucking clue what you're doing.
Oh yeah.
You have zero clue. Like
you can read all the books
until you're doing it.
Yeah,
you're gonna have no fucking clue. You're learning on the fly.
Yeah,
you could get suggestions and talk to parents and be like, oh well, what did you do for this? But that may not work for your kid. Like every kid is different, and you're fucking winging it.
Yeah,
most of the time. And I will say, be careful what you say around kids because they hear fucking everything.
Yeah,
everything.
Yeah,
the shit that my kids say. Oh my gosh, I'm just like, wait. Oh, I remember.
Whether you show it or not, though, first time he drops that F-bomb, you're laughing your ass off in the background.
I've got a video from my ex-wife. She just keeps encouraging him. Like, my youngest one's sitting there just saying fucking shit over and over again. And it's from this tiny little human in this little voice. And it's funnier than shit. She's like, what'd you say? Fucking shit. What? It's like 5 times in a row.
Yeah, we got this video of Calvin. It's like Gina's trying to get him out of the car seat, and she goes, "Get me out of this fucking seat." Like, well, he used it correctly. It's like you're just cracking up, dude.
And you have no one to blame but yourself because that's where you learned it.
And then he'll say random, like he'll just hear you say something and like understand, and like he'll use it in the right context. And you're like the other day he goes, "Oh, that was a good observation, Dad." And I was like, "What?
How do you know what observation means?"
I was like, where did that come from? Like I was talking about a TV like his Spider-Man TV show, and I was like, "Well, why is he wearing?" He's like, "Well, Dad, that was a good observation." And I was like, "What?" Like, you used it right and everything. Like, what?
They're also incredible negotiators.
Yeah.
You
when it comes to bedtime,
you want to learn some negotiating skills? Just go hang out with a toddler.
Yeah, negotiating how to delay bedtime. Yeah. That's a nightly.
Yeah. Hey, I got a question. And then they'll just be like, "Oh, I love you, Dad." Like, that's not a question, buddy. What's your question? Why do elephants walk the way they walk?
Why is the sky blue?
No, seriously, like that's just random questions. Why do elephants have trunks? Why do elephants walk the way they walk?
Yeah.
Calvin likes to ask why, like he'll ask why he did something. Hey, Dad, when I was playing outside and I took that toy from our neighbor, why did I do that?
You don't know the answer, Dad?
I'm like, I don't know, because you wanted the toy. Like, why?
Yeah.
You probably shouldn't have done that because I made her cry, didn't it? You know, like you gotta like
their imaginations, man.
Oh, dude, it's crazy.
My youngest new thing to say was, Dad, I don't know. I can't control my brain. My brain told me to do
it. Be careful. You might end up in jail with that one. Oh, man.
Well, Sully, this has been great having you here, man. Is there anything else you wanted to cover before we get you out of here?
No, I think it's a great note to end on. I appreciate you guys getting a little more real and raw here at the end.
Sure.
That's the next big thing for me in life that I'm excited about is starting a family, and just leaving it up to God as to when that will happen. For now, it's SBA lending and everything else. So thank you guys for having me on. Hopefully I'll be back someday.
Yeah, for sure. It's a lot of fun. We covered a lot of stuff. I feel like I learned a lot.
Yeah,
so
absolutely.
Awesome.
Yeah.
But we always end the show the same way. So before we get you out of here,
we play a little game. We call it the tombstone game.
Okay.
Here lies Sully. What's it say on your tombstone?
Ooh. Man. How many cliche answers do you guys get on this?
we get some cliche ones. We get some funny ones. We get some really like serious ones. We get some, classic loyal father, good friend.
Yeah.
Like we get those, but then some people like just say some like crazy one-liner, it's one.
It's
And
it's cool to see how
this is
people.
a thing that can change over time.
Yeah,
So like,
and this is but it's cool to see how people take this question, because you can kind of get an idea of their personality, but you can also find out what is the most important thing to them right here in this moment.
Yeah. I have two. One's a little more playful.
Okay.
Kind of ties into lending. Super cliche, basic, but another day, another dollar.
Yeah.
I just love helping lend. And then the second one, another cliche saying, but I'm a very, having lost some friends at a younger age, I'm a very big advocate of just, buy the ticket, book the trip, live now. And so I would say, ask for forgiveness later type of thing, something like that. I try to really emphasize that, because a lot of people talk about living life to the max, but don't actually do it. And sometimes we need to be reminded to do it. Like sometimes I look at my calendar, I'm like, I haven't taken a week or 2 weeks off of vacation in 2 years. Like, and if that's you listening right now, book a trip. The work will be there when you get back. When you're young, this is the time to travel and the time to spend with your kids and whatnot. So I just try to really reiterate that in my day to day, and even on a yearly basis, just taking those trips and living. So, yeah,
That's awesome.
Perfect, brother.
I appreciate it, guys.
Of course, brother.
Absolutely.
Yeah.
And thank you all to everybody that's tuning into the show. If you could click that subscribe button for us, if you haven't done so already, that would help us out a ton. Pat and I have a goal to hit 500 subscribers on YouTube for the end of 2025. So help us hit that goal. Share the episode with a friend if you got anything out of it, and hit that like button. Comment what you thought below. We will see you next time.